Good afternoon, everybody. Welcome to LendIt Fintech's weekly news roundup. My name is Peter Renton, chairman and co-founder of LendIt Fintech, joined by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
You're not a colleague, are you?
I don't even know if that's a word.
Yes. And then we have another good friend, Dan Kwan, joining us. How are you doing, Dan?
Great, doing great. Thank you, Peter and Todd. Glad to be back on the show.
Yeah, and why don't you just give us a little 30-second intro about what you're doing these days?
Sure. Yeah. So formerly with the CFPB, fintech, and left the bureau 18, doing lots of advisory services with fintechs. Recently launched our first fund, Navcal Ventures. So we're investing in fintechs and also adjacent space.
All right. Well, let's get right into it because we've got another busy week of news to get through. And first one I wanted to highlight was the MasterCard news that came out a couple of days ago. I really feel like this was really big news, and I don't even think it got as much play as what I expected it was going to get. But basically, MasterCard Installments is launching in Q1 of next year. It's going to be in the US, UK, and Australia, and it's going to allow any lender basically to plug in and offer buy now, pay later. It's seamless for merchants, and it is really to me, it's a game changer in some ways because when I was digging into this a little bit just before we came on, I was realizing that this is. They've got a pretty sophisticated technology here. It's like you get a digital card, it integrates into wallets, and they've got some big names that are going to be pilots, like names like SoFi, Synchrony, Marqeta, Barclays. I mean, they're big names. So what do you guys think?
So-called buy now, pay later loans increase sales by 45% and decrease abandonment by 35%.
Big numbers.
I mean, right there tells you so much of what you need to know about why everyone's getting in on the game, that this behavior has shown you can sell a lot more and you can keep customers from dropping out of your process a lot more if you offer them this simple option of, hey, don't pay $100 today, just pay $25. In 2 weeks, pay $25 more. And the fact that most of them are without interest, for me, I mean, I do it all the time. It makes me feel like I'm getting a deal. Even though I'm paying the same, when I buy it, the reaction is, wow, I just saved myself some money today, even though I'm paying for it over time. And so I think a lot of people have that same type of reaction. And to me, it's just brilliant in terms of the move by MasterCard and the ecosystem that's going around buy now, pay later. It's really, really fascinating.
Yeah, I think this is really, even to Peter, so right before the show, we talked a little bit about it. I mean, I think you used the word game changer. I think I largely agree with you. I think with the massive scale MasterCard brings to the table, so anyone, any issuer, any bank, any fintech, if they want to launch a buy now, pay later, they don't have to struggle with sort of, sign up merchants. They can just use this, technology and just plug into the vast network MasterCard has already built. And I think there's also a, from technology's perspective, I think I read somewhere that MasterCard will also use its, open banking connections. I think, their recent acquisition of Finicity and also a open banking platform, I think Aya. I forgive me if I don't pronounce the name correctly, in Europe. So they are building these massive connections where they can have direct insight into the borrowers or consumers' current account, checking account activities. So that provides additional, late insights for lenders to underwrite or pre-prove the line before the consumer even makes a purchase. And I think feels like this is 2012, 2013 of the marketplace lending days where there's so many companies jumping, offering a marketplace loan. I think what comes with it also probably lots of scrutiny. The CFPB in July published a blog post really focusing on buy now, pay later. And yesterday, the CFPB's credit card market reports, which it publishes once every 2 years, also has a section dedicated to buy now, pay later. I think we're going to see probably lots of scrutiny from the regulatory front, and Todd, just to maybe to pick up what you just said, even though I'm still paying $100, but I'm only paying $25 now, so that probably makes me more inclined to use BNPL to buy something. But then the ability to repay question will come in, and I think by and large, Afterpay and the major players, they don't really call themselves lenders, but in reality, I think regulators probably will see them as lenders. And
right. Well, with the exception of a firm calls himself a lender, but yeah,
a firm, right?
Afterpay does not. Neither does Klarna. And I think you're right. I think there's going to be some of this ability to pay. We've talked about it in payday lending. It's, but I think I really agree with you, Dan. I think there's going to be some, because it's so popular, people love it. And when you got like, there's going to be, probably half the population that'll be participating in this type of way of buying things. It's regulators are going to step in at some point.
And there's going to be some horror stories.
There are, but the good thing is,
there's always horror stories, just because people always overextend themselves. No matter what the product is, someone's going to misuse it, or someone's going to abuse it on purpose and try to get all this stuff without thinking they have to pay everything. And that's where I think the big, at least from my side, the big fear is that the overreaction to that, when most people use it responsibly, or at least try to. And with the stance they've taken on crypto, and seems to be the stance they're taking towards fintech, which is a little more adversarial today, it makes me nervous for stuff like this.
Yeah, it is. The good thing that, like, even with Afterpay, which does no credit checks whatsoever, but they limit you to $2,000. When you start off, they limit you to a couple of $100. So it is really, I feel like the industry's trying. I think they're fully aware, but it's going to be, with MasterCard, and obviously Visa have a product that they're developing as well. So game on in 2022. I tell you, it's going to be wild to watch all this unfold. Anyway,
do you think this is going to be? I'm just curious. Just maybe one last word. Do you think this is going to be the table stakes that everybody's going to have it? Like whether you're a traditional bank or you're a fintech or you're a lender.
I do. I think there'll be virtually nobody within. It's going to happen very fast. Within 5 years, this will just be every single merchant on the planet will have a buy now, pay later plan. That's what I think.
Yep,
agree.
Yeah. Okay, let's move on. This happened last Friday after our Thursday show. China decided to ban all crypto trading, all mining, and obviously the price of crypto has dropped since then. Basically they're going all in on kicking out crypto, and basically they want their digital currency to have no competition, and I think it's a boneheaded move. Again, I won't be able to ever go back to China because I say all these critical things about the Chinese government. But really, what they're going to find is that all the innovation now that's happening around the world is not going to happen in China. And China had 3 years ago, the leadership of the world in fintech, and now they're really they're stifling all their big fintech companies. They're stifling crypto. They want to have control, and I tell you, it's not going to be pretty for them. I think with all the other countries are going to pass them by. That's my opinion.
It's going to be Asia outside China and Europe, because right now China's whacking the industry just so that the government can be the one main CBDC or issuer of digital currency. And the US is taking the stance of not being crypto friendly, at least today. And so everything's going to go either Asia outside China or to Europe. And those two are just going to fly right past both the US and China.
I mean, that's the part that I'm concerned about, right? So, I mean, the world's two largest economies have the most anti-crypto attitudes from the regulators' perspective, right? So, but I still do think, so here's what I think. I think if the innovation is good, if the innovation has potential, to revolutionize our financial transactions, our financial lives. No government entity can stop it. No matter what you do, you cannot stop it, because this is, if you try to stop this, you're going to be on the losing end of history.
Right.
And I think, I think Gensler, I think early on, probably just last month, I think he said, crypto space probably is fraud, scams, and I think there's probably some truth to it. But probably we saw the same thing with the early days of the internet. But can you imagine today, how could we live a life without internet?
Right. Yeah.
I mean, that means that you can't even think about it, right? I mean, so I just think I'm less worried about Bitcoin price goes up, 10% or down 10% today or tomorrow. I'm more concerned about the underlying technology, how it's really empowering the other financial services that, as we know today, and probably 10 years, 15 years from today, we'll have a very different financial services industry powered by this decentralized, finance. And,
right, with all this open source work that people are doing, oftentimes for free, and it's so much innovation happening that you've got these, millions and millions of IT people providing more innovation on a daily basis, that they're doing it in these decentralized networks for free. It's just fascinating. China's going to miss out on a lot of that. Anyway, we need to move on. I want to talk about NFTs because NFTs are still hot. We had an article this week talking about Tom Brady's company, Autograph. We got Tiger Woods. I've been trying to get a Tiger Woods NFT all week and have failed.
How much are you willing to pay, Peter?
I'm trying to get. They're dropping NFTs at in my time, on Mountain Time, 1, 2, and 3 on Tuesdays and Thursdays the last 2 weeks, and I've been trying. I missed the first drop last Tuesday, but I've been on the other drops, and I have not had any luck because there was 25 for sale. I missed the 3 o'clock one because, hey, we're going live here, but the 2 o'clock one here, there was 25 on sale. It was $750, and I got 14,000. My number was 14,000 in the queue, so 25 for sale, so no chance. But anyway, my point is these are selling out in minutes. And Tiger Woods had 10,000, dropped 10,000 NFTs over the last 2 weeks. Tom Brady's had 10,000. They're selling on the resale market for 100x. Some of them are for 150x. It's really quite staggering. And you've got 12-year-olds selling. He sold $400,000 worth of his whale NFTs. Exactly. And so it's just it's a super hot space, and I think those of us in fintech really should be paying close attention.
And I think we should be encouraging. To me, it feels like a testing space right now, and it's trying to figure out exactly what are NFTs. Where can they add the most value. I think it feels like the early days of crypto, where you'll have this big spike for a while. It'll probably, disappear for a little while, and then they'll figure out, all right, here's kind of our area that we can kind of hold on to. So I'm all for everything that's going on. To me, I think innovation is, you need to test and go through these types of cycles and figure out on the other side, where does it really fit? And I don't think NFTs we know yet.
No.
Yeah, I'm curious. So I think I get it for the digital collectibles. NFT definitely that's the current use case. But I'm more interested in the future use cases. Are there anything like can we sell, I don't know, concert tickets using NFTs in the future?
Sure.
Can we? So I think that's that's probably is going to be far more interesting, and have a real life. Well, I wouldn't say digital collectibles have no real life value, but I think those things will be far more, interesting and probably impactful on our.
Yeah, that's exactly. That's the thing. They're digital collectibles, and there's no reason why. Like I'm going to the Broncos game on Sunday here in Denver. They're playing the Ravens, and I got it's all digital. You have to have it on your mobile phone, so you're already got it digitally. The ticket,
right.
There's no such thing as a paper ticket anymore, and why that could be that that could be an NFT that you could post on your OpenSea profile. You could after the fact you could sell your ticket. It's there could be
but Peter, the barcode on your phone that could be forged, right? A hacker can come in and forge it, but probably you have less chance of doing a NFT.
True. Yeah. So the use cases for NFTs, we haven't even begun. I think NFTs are here to stay. I think we're going to see.
I think something like the music industry is, to me, like the most obvious, where you can better control who owns, or limit those who own. I mean, it seems to me if it's in something like that more practically for the artist, than some other uses. But I think it'll figure itself out over time.
It will. I mean, I read something a few weeks back that said that in the long distance future, every song will be an NFT, and that will be the only. And so finally, you'll be able to have somewhere other than Spotify where artists can actually get can get paid. And anyway, it'll be interesting to see. Let's move on. I want to talk about regulators. There was a bit of news this week. Really interesting article in American Banker talking about just there's a lot of activity happening right now in Washington. Your old agency, Dan, looks like I've been. I was on the call with the American Fintech Council yesterday. He seemed very confident that there will be a new CFPB director confirmed, really very, very soon, in the next few days. Potentially, and so that will have big ramifications for fintech and for finance in general. They're talking about I don't know how much you know about the incoming director, Dan, but they talked about taking a hard line on earned wage access and buy now pay later. I talked about potentially open banking, attacking open banking. Anyway, I don't know if you have any inside scoop here, Dan. You can share with us all about the new CFPB director.
I'm not sure if I have any insights. I think a lot of people, and even the bureau staff, they don't know what exactly Chopra's priorities are. But I think one thing for open banking, I think I think the ship has already sailed. Whether it's going to be his number one, number two, number three priority or not, but I think it's going to be a CFPB priority. We may not see a rule proposal this year, but we probably will likely see something Q2 or even later next year. So I think that definitely is going to be probably, I would say, from the policies perspective, the most profound change, and really setting up a regulatory framework that governs open banking for the first time in the United States. Mm-hmm. On the other things you mentioned, the article mentioned earned wage access and also crypto. I don't know. I think it's really hard to see how. I think crypto probably is easier in the sense that the CFPB can always use its UDAP authority to go after companies that are, they believe deceiving, defrauding consumers. And not to mention FTC already has the authority. So given Chopra's relationship with the FTC and with the current chair, so there may be some coordinated enforcement between the two agencies. Earned wage access is really, I don't know. It's really difficult to say. I think you saw the CFPB's interpretive letter from last December on just one company.
Yep.
And whether the CFPB is going to continue doing a very narrow interpretation, I don't know. And but you already saw states like California, which is taking a much broader approach and to include everybody. And so I think there will be probably some no, I wouldn't call it a fight. I think some even I wouldn't even call it turf war, but I think states probably will be more active in the earned wage access space, and the CFPB probably will most likely use its I think UDAP authority just to police the industry versus really defining what is credit, what is not. And this is different from buy now pay later. I think buy now pay later. I think the answer. I mean, the writing is already on the wall. The CFPB believes it's a credit.
Right. Okay, let's move on to Coinbase. This is an interesting development. You can now, if you have a Coinbase account, of which millions of us do, I know I have one. You can now get your paycheck put into your Coinbase account, and you can have it then immediately converted into crypto. if you want. They're not. It's going to go live in the coming weeks. Interesting, they did not disclose who their partner bank is going to be. They have MetaBank, I think, but it sounds like is their partner bank right now for a lot of what they do, but they did not indicate who that was going to be. I'm sure that's a hot account to get. But yeah, it's just more mainstreaming of crypto. It feels like
Another neobank.
yes,
Yeah.
another neobank, exactly.
I mean,
Coinbase is a neobank.
it's naturally what they needed to do, because ultimately you want your users to be the main place that they come, the first place that they come. Until they deposit their money, it's still a secondary account. And so this is the ultimate goal for Coinbase, a Chime, whoever. That's what they want, is direct deposits. And to me, I think it was a natural move by them. And Peter, this brings back kind of what we were talking about a bunch last week too, is that they want people to stay within the system that they're building. So whether it's Facebook or Apple or Google or whoever, in this case Coinbase, they want you to stay there. So you don't want to just come to Coinbase to do your crypto trading. They want you to use Coinbase as your financial services
Right.
app in life. And that's how and why they would move to something like this. So to me, it's a continuous loop of rebundling of what was initially unbundled and now is coming back to being rebundled.
Yeah,
so I think it's fascinating.
Absolutely, it's totally rebundling. Yeah, and we all know ACH takes forever. So you want to make a trade. If you have the money with Coinbase there, you can make the trade right now. And if you already convert part of your salaries into crypto, you don't have to even worry about executing a trade. So it's a very smart move.
Yep. Great way to dollar cost average your crypto investment.
Totally.
Anyway, moving on, we had another interesting development here from a new merchant or new lender, potentially a new small business, so say a small business finance company, shall we say. Former Robinhood employees are launching Paraffin. I'd never heard this company until this week. They raised a $30 million Series A earlier this month. They just closed on that. I say they're in the process of closing a $150 million facility with Atalaya. And what they're doing that's interesting is that like Mind Body Capital is there. Mind Body is that yoga studio. If you they manage all kinds of yoga, Pilates studios all over the place. And they are getting into the capital game like everybody else. And it looks like Paraffin is going to power the capital for Mind Body for all the more. And then there's, I don't know how many tens of thousands of businesses they have that all have capital needs. So new name, you don't very often, you just haven't seen that many new, small business lenders launch, but here we have one.
Well, during the pandemic still, right? So, some people are still calling for a third round of the PPP. And I think it's interesting. I think I read the article where they said it's a merchant cash advance. So the product itself is nothing new. Right. I think what's really what's interesting is really their way of acquiring customers, and they talk about they are able to lower their fees because they're low CAC. Will be interesting to see if they can continue doing that. And
lending as a service type thing. They're not starting direct to small businesses. They're going through different big channels, and it's really providing lending as a service.
Yeah.
And I think it's also a good thing to note is when successful companies like Robinhood get to a certain scale, go public, then you start to see the branching off of early employees that then start their own businesses, who then hopefully succeed, and then their employees start their own businesses, and the ecosystem keeps growing. And so to me, it's that web that keeps continuing to be created around fintech. And right now we're coming into what I know, Peter, you believe this too, the second wave of fintech, which is post-COVID, though hopefully COVID ends sometime soon, is to me, I think, really interesting to see where the space goes. We had pre-COVID, you had COVID, now you have post-COVID coming up when it comes to innovation, and I think the sky's the limit.
Yep. Yeah.
So you have a PayPal mafia, you have Uber mafia, then you have a Robinhood mafia.
There will be a Robinhood mafia for sure.
Yeah,
that's going to happen
for sure. Yeah.
Anyway, I want to talk about this report that came out this week from the Bank of International Settlements. Basically, a group of 7 central banks. The Bank of International Settlements is the central bank for central banks, and they have like the Bank of Canada, Bank of England, Bank of Japan, the ECB, the Fed, and looks like the Swedish and Swiss. I think that's Swedish. God, I hope it is. Anyway, they've got seven central banks coming together to basically provide a manual for CBDCs. So this is sort of what they're doing. And the Fed also has they're supposed to be out this month. That's what I was told, but it's not. It hasn't come out yet. The Fed, the work they've done. Remember the name of the project, Dan? Todd. They've got a Project Hamilton. That's it.
Yep.
Project Hamilton, and supposed to be out how the Fed is viewing central bank digital currencies. They're doing work with MIT. But anyway, I haven't read the thing yet. This is weekend reading for me here for this, basically how these central banks are looking at implementing CBDCs.
I honestly, I'm not totally sold on CBDC. I understand there's a lot of the benefits CBDC can bring, to the table, but I feel like there's just genuine fear among the central bankers of these private issued coins, whether it's Bitcoin, Ether, or stable coins. I think they just do not want to lose control of the coin. Currency issuing authority. And to a large degree, our currencies are already digitized, right? You have a Visa card, you have MasterCard, DDA accounts. The money we don't see cash. It's a number basically. I feel like if the private sector is doing so much innovation here already, granted there are a lot of concerns, right? That's what regulation is about. It's really efficient or effective for governments to issue CBDCs? Not to mention, we don't even have a real-time payments yet, and the Fed will take another 2 or 3 years to build it up. And how long is it going to take them to issue CBDC? Who knows?
Yeah, it will be many, many years.
Yeah, to me, I think you're right, Dan. In so many ways, we don't need CBDCs, but we will get them because they're terrified of losing control of the money supply. And so they're essentially doing it to ensure that they can issue what everyone else is starting to go to, or groups of people, even banks are starting to trial blockchain and everything like that, that they need to try to jump ahead and say, hey, we're on here too, so we can still control, and we don't lose control of that money supply. So I think it's interesting to see where it goes, but I'm a little bit more on your side that I don't think we necessarily need CBDCs, though. I don't think the momentum is going to stop them. I do think they're coming.
Yeah. Well, the trouble is, Bitcoin right now, it's at 818 billion market cap. The people are talking at 10x, 20x from where it is. Suddenly you're looking at 10, 20 trillion dollars of market cap. It's a pretty good percentage of global GDP, and with no controls over it whatsoever. I think that's what they're I think they're scared, and they're probably right to be scared that you can't have 20% of the world's economy go through something that where there's no control.
Unregulated, right? That's what they say.
Unregulated, yes. Okay, so last story I want to get to. So this is a really quick one. It was a sort of a throwaway, but a firm who, we started with buy now, pay later. We're going to end with buy now, pay later. They're jumping onto the crypto bandwagon. In a deck at an investor presentation this week, a firm CEO, Max Levchin, let basically out that the firm they've got a bank account now like everybody else. They've got I can't remember exactly whether it's a savings account. I can't remember.
Savings account.
Yeah,
Cross River Bank.
Yes, Cross River Bank. So they said you will be able to buy and sell cryptocurrencies directly from your Affirm savings account. That is directly from the horse's mouth this week. So Affirm is jumping into crypto.
Peter, how many crypto stories are we covering today?
Well, that was the last.
Every one of them.
That was the last one. And yes, it really, I mean, we touched crypto on over half of our stories. Three quarters were about something to do with crypto. Yes.
Yeah. So what does that tell your audience? This is the train has left the station. Everybody just wants to jump on it, and if you don't jump on, you'll be left behind. I think it's just, again, Affirm is just another neobank. They already got your deposits, savings, granted, not checking. So they want to offer the new services like SoFi has been doing.
Right.
It will be interesting to see, whether they charge a commission for it or not.
Right. Anyway, we are out of time. We have gone over. I appreciate you coming on today, Dan. Thank you very much. Todd, always great to chat with you. Thank you to the audience for watching. We will be back same time next week. And just a reminder, if you're interested in the hottest geographic region in the world, Latin America is it. We are happening in Miami, December 7th and 8th. So check it out on LendIt.com. Have a great weekend, everybody. We'll see you later.
Take care, guys.
Yeah. Thanks, Dan.